The closing bell rang hours ago, but the fallout from today's technical glitch at the New York Stock Exchange may not be over. Trading on the floor abruptly stopped at 8:30 this morning and didn't open back up until afternoon. Joining us to talk about the impact of the glitch is business expert Laurie Itkin. Laurie, good to see you.
Hi, Andrew.
Between Greece and the problems in China, which we're going to talk about in a moment, and now this glitch, how do you expect investors to react to all of that's going on Wall Street?
Well, Andrew, I'm a morning person, a big morning person, and by the time it was 9 a.m. today, I was already exhausted. I mean, people were a little nervous. I mean, you wake up and you see that United Airlines has grounded their flights, the New York Stock Exchange has halted trading, and then the Wall Street Journal couldn't be logged on to. So people are thinking, what's going on? It gets people nervous.
Right, yeah. So the White House and other government officials are saying essentially this is not a cyber hack, nothing to be concerned about, but it was just a coincidence that United and the Wall Street Journal and the New York Stock Exchange all had major computer problems at the same time. And also, is this something we should be concerned about?
Well, cybersecurity is always a concern, and who knows what's going to happen. But the good news was that there are many exchanges in the U.S. so that even though the New York Stock Exchange didn't have the redundancy in its system or backups to process trades, those trades ultimately were able to get routed through other exchanges. And that's probably why you saw that the market went down a little bit more near the close. That was right after the New York Stock Exchange opened up.
Right, so trading did continue in places like the NASDAQ, for example,
right.
But we saw that number, even though the trading stopped on the New York Stock Exchange, continue to drop to minus 260 plus today. In part, this was because of what's going on in China. What can you tell us about the situation there as we've, for the most part, been monitoring what's going on in Greece?
Right. I mean, the Greece ordeal, and now China. I mean, last night before I went to bed, I was checking the Chinese markets, and I was quite alarmed because the the mainland exchanges had 5% and 6% drops, and it also affected the exchange in Hong Kong, which was down about 4%. Normally, when markets go up or down about 2%, not a big worry, but these were big falls. And now what the government is trying to do over there to stop the falling stock prices is unprecedented. It is absolutely nuts. The government is giving money to brokerage firms to actually buy more stock with the thought that if you buy more stock and there's more demand, that's going to prop up prices. They're also allowing people now who have margin loans to use their homes as collateral. We would never do this in the U.S.
Very interesting. I was reading that I think that the Chinese markets lost about $2.5 trillion in value with this drop the last few weeks. Is that right? And what's led to such a severe drop? How does that affect us?
Well, it's almost similar to what we had in the United States during the 1999-2000 timeframe when investors were buying anything with a .com after it. Notably pets.com, and it truly was a bubble in China. The market has gone up over 100%, more than doubled in less than a year. And what's happening there is new investors are coming in and buying stock for the first time, and now their first trades, they already have a loss. It's very different. In our country, most Americans have some exposure to the stock market, either through pensions, 401ks, or really anything that has to do with retirement.
So that's, I guess, a good question next is what do everybody out there saying, okay, how does this affect me? What do U.S. investors and retirement savers do as a result of what happened today? How does this affect them?
Well, it really depends what your objectives are. First of all, you don't want to panic. I mean, I had clients calling me last week after the Greek issue saying buy more stocks because they see it as a buying opportunity. But if you are more risk averse, you may want to look into bonds, even though bonds don't normally grow as much over time as stocks do. But you just need to have a diversified portfolio and know how much volatility you can stomach so that either you or a money manager can help design a portfolio that fits with your needs.
Makes sense. It's a good reminder that when times are tough and you see the stock market drop, it means stocks are on sale. So that's good stuff. Laurie, thank you very much as always.
Thank you.